Welcome back to Modern Finance. In today's episode, we'll be talking about FTX and Grayscale. FTX's trading affiliate Alameda sues Grayscale over crypto investments. FTX trading affiliate Alameda has sued crypto investment company Grayscale and its owner Digital Currency Group over the structure of their large Bitcoin and Ethereum trusts, dealing a further blow to the SoftBank-backed crypto conglomerates. Alameda, which is run by restructuring expert John Ray alongside other FTX affiliates, accused Grayscale and DCG's management of being possessed by self-interest and enriching themselves at the expense of the trust of shareholders by refusing them to get redemptions and charging exorbitant fees. Grayscale, DCG's asset management business, operates several cryptocurrency trusts from which it earns lucrative fees for managing Bitcoin, Ether, and other tokens for customers. Investors can buy shares in the trusts through their brokerage accounts rather than holding direct exposure to the coins. Alameda owns more than 22 million shares in Grayscale's flagship Bitcoin trust, the company said, and a further 6 million shares of the company's Ethereum trust, which equals to more than 3% and 2% of the overall shares outstanding respectively. Those holdings were worth $290 million on the secondary markets as of the end of last week, the complaint added, and could be worth almost double that if Grayscale reduced its fees and allowed investors to redeem their shares for the equivalent value in the underlying crypto assets. Since the collapse last year of FTX, which was founded by Sam Bankman-Fried, who was forced to step aside when the exchange and affiliates, including Alameda, filed for bankruptcy, shares in the trust have fallen to substantial discounts compared to the underlying crypto they hold. Grayscale's Bitcoin trust is trading at a 45% discount to the price of Bitcoin. Grayscale does not allow investors to redeem their shares for the coins held in the trusts, which would help close the significant net asset value gaps. FTX said in its filing to a Delaware court on Monday the following: due to Grayscale and DCG's malfeasance, the only way for shareholders to exit their investment is by selling their assets in the trusts in the secondary market, where shares are trading at a fraction of their proportionate interest in trust assets. Also, in a statement, FTX's John Ray said, "We will continue to use every tool we can to maximize recoveries for FTX's customers and creditors." The lawsuit marks the latest problem for Connecticut-based DCG, which is one of the largest and oldest crypto investors. DCG's chief executive, former Houlihan Lucky banker Barry Silbert, and Grayscale's chief executive, Michael, and I'm pretty sure I'm gonna butcher the surname, but I'm sorry, Sonnenschein, are also named in the complaint. DCG has been battling the fallout from plunging crypto prices and the collapse of FTX since last year. The lending unit of its crypto broker, Genesis, filed for bankruptcy earlier this year. The group is seeking to sell its news site, CoinDesk, in an attempt to raise money and repay creditors. Grayscale's flagship Bitcoin trust holds about 3% of all Bitcoin, worth $14.7 billion. That's a lot. From which the asset manager earns a 2% fee, and it earns 2.5% fee for the 3 million of Ether in its Ethereum trust. The asset manager has long argued that the trust should be converted into exchange-traded funds. Grayscale is suing the U.S. Securities and Exchange Commissions, the SEC, over blocking the creation of a spot Bitcoin ETF, arguing that this would benefit investors and allow redemptions. Oral arguments in that case are scheduled to be heard by a federal appeals court on Tuesday. And lastly, Grayscale said, the lawsuit filed by Sam Bankman-Fried's hedge fund Alameda Research is misguided. They also added that the company has been transparent in our efforts to obtain regulatory approval to convert GBTC into an ETF, an outcome that is undoubtedly the best long-term product structure for Grayscale's investors. Well, that's all for today. Thank you for watching. Don't forget to subscribe and see you on the next one. Bye.